All right, we're going to be going over the gold and silver strategy, how I use it, and whatnot. It's going to be, SMT majority. It's going to be SMT and important locations. Now, as far as all locations go, break it down. I got a little Google Sheets here. Um, the main location is going to be VWAP. You see VWAP all the time. New day and new week opening gap are going to happen literally all the time. Monthly, daily, and weekly open does not happen that often, but when they do happen, it's usually pretty good. Previous weekly high and low, previous daily high and low happen all the time as well, but the most is going to be previous day, previous week, and the VWAP, whether it's on the monthly or the session. I'm sorry, the weekly or the session. I don't use monthly VWAP, but I have a bunch of pictures that go with it as well. But as far as the strategy goes, this is pretty much it. Okay, so you go to a new day. You're not, this isn't. This happened literally today. I'm not cherry picking anything here. So the SMT that happens right here, that happened this morning. This is a previous day's low. Excuse me, right there, and then see the same spot was right there and here. So from here you can clearly tell there's an SMT divergence on the previous new day opening gap there on the blue, and the previous daily low over there, right? So previous daily high, whatever. So previous daily high or lows down here, new day opening gap, SMT. You'd enter as it starts to go up higher, and then you would take the profits at VWAP. So there it is. The low is there, and take profits at VWAP. You'd be surprised at how many times you will get close to the VWAP and then it reverses. So what we do is we go a little bit off of the VWAP. So this is a new day opening gap here. You see it's very small, but it still exists. You just tap into it and then pushes through the VWAP. But notice how it had SMT over here, right? Higher high, lower high. So this, you want to short down to this VWAP? No, you don't. So you only want to do it if you have a reasonable expectation that the market is going to continue. So I'll say this for an example. You see how the VWAP has already been touched. It's already been hit. Now, going it towards the other VWAP is unreasonable because we already hit the majority TP, or the big TP that we were looking to go to anyway. There's no reason why we should be freaking out and trying to go to the other VWAP or trying to take too much out of the marketplace. Be humble and be appreciative of what's been offered. Take 1, 2, 3 setups a day, and that's it. So you can see how SMTs happen literally all the time, but SMTs that happen in an important area matter even more. So you can see how this made a higher high. This one made a much more obvious lower high into that fair value gap. That'd be an important area. New day opening gap. VWAP is here, so it's using as quote unquote resistance, and you can use that to short for at least a little bit. But it's Friday on gold. It usually dies out a lot after lunch and after New York AM. So I wouldn't even look on the PM session on a Friday. But for the sake of the example, you can see how we have, this is a support area right here, right? So this one made a lower, higher, lower, right? This one went higher, and you would take profits at new day opening gap. You use it, profits to hold it all the way to the VWAP. So do really whatever you want to do. But the main idea here is that we're going to be holding this because we have an important area. New day opening gap, lows probably 50%. You have your TP set to whatever. You could either do the previous daily high or low, or you could do for something even higher. You could look for liquidity. This is an area here. You can play a bit more conservative, go for the 1 to 3. You can go over here, whatever, in the AM session. Swing high, all these swing highs. You can look for whatever you want, and even if you wanted to hold it all the way into VWAP, you very easily could have done that for a nice little trade there. But anyway, that's basically it. I mean, it's not a big complicated thing, and you could even see how on the message me. Yeah, no problem, Colton. All right, so you see on the photos here, do a slideshow. You can see it's the same thing over and over again. So this is trade number 33 and the F32. You see how near the VWAP, although it's not perfect, it's very fucking close. Higher low, lower, higher high, lower high, right there. You got stopped out because this is an SMT near the VWAP, but you're not going to win every single time. So you see relative equal high, higher high at the VWAP right there, short, and then same thing over and over and over again. You can see here, higher low, lower low at the VWAP. This would happen at the new day opening gap. At the first time, you could trade at the first time, but went through a little bit higher than the VWAP, came back, your entry, starts to go green and it starts to consolidate up until it hits your TP. Same thing here. New day, a new week opening gap. VWAP is right there on the right, and on the left you have a new day opening gap. I believe that is new day opening gap. Had SMT on both sides. You short it all the way down to VWAP, and there's a liquidity pool down there. You want to get it a little bit into the new week opening gap there at the bottom. Over here on the left, you clearly see VWAP there. Now the only reason why I took this trade on gold is because on silver the trade would be just about already finished. So on the left side you can see how I took my TPs just below the previous day's Asian session lows over there. So same thing here. Gold made a higher high. Well, it's pretty close to relative equal high. And now silver made a much more obvious higher high, and it started to reverse after the top end of the new week opening gap has been filled in. So that's pretty much that. This is a trading strategy. I guess if you want to get into more details about what everything is and why I use every indicator that I do, Market Structure Pro, this is a buddy's indicator. If you want the link to it, I'll put it down there in the description. It's very useful. SMT, I don't really use this as much as I used to, but all this does is outline SMTs for me. I just use it for my, using my eyeballs is much better. This is a volume imbalance. I usually use this on the 1 minute time frame if I'm trading gold. I don't really use it anymore, but you'll notice how trading gold in the 1 minute time frame, there are so many volume imbalances, especially on silver, where you can get some really good entries off of that. And another new, you can do new day opening gap I use for different instances, but it basically shows the same thing. New monthly, daily, weekly, and monthly opening lines. I made this using ChatGPT. It's a pretty good indicator. All it does is tell me what the daily, monthly, and weekly opening lines are. I don't really use it that often. Over here, new day and new week. Here are my settings. I use this to display the new day and new week opening gaps. It has it set to the bodies. It doesn't use the wicks, so it uses the body because I want to use the entire thing. So from the high to the low of the new week opening gap and new day opening gaps, I have it set to 50. I think I have a bit more. Should be a bit more on new days, but yeah. So this is how I have everything set up. Let's see here. VWAPs, I have one for a weekly. I have another one for a session or a daily. Previous weekly high and low. Previous daily high and low. Market structure, I don't really use this at all. It really shouldn't even be on. I don't really use it at all. And ICT, kilozones, and pivots, I have my own custom settings here. I think these are the best personally, and makes it just easier to see and makes it better. You don't have to have the mitigation of the levels if you don't want, like London. Let me see here. Yeah, show pivot midpoints is pretty good. Stop points mitigated, and you can also use, because this is obviously one of the stop points that's mitigated, and show pivots. So the pivots is what it does here. So on the top of the lines when it gets hit, I like having that on there just so I can see what the lines are going to be in the future. And these are all the time zones that I have, or the times that I have set to it. These are all Eastern, by the way. And then you have all this stuff. I have the session draw limit set to max, mainly because I want to have as much sessions as possible, because I use a lot of backdated information. The time frame limit, I have it set to 2 hours because I like to have the 1 hour time frame sometimes work, because I want to use 1 hour time frame. I want to see the sessions in the days, so I like having it set to 2 hours instead of just 1 hour. So time zone, you can have that set to New York because you want it to be set to New York. My stuff down here either goes from New York, because I'm in a New York time zone right now, and I'm going to go back to Chicago. So whenever we go back to Chicago time frame, I'll set it back over there. But right now we're in New York because we're on the Eastern Coast. So so all this stuff's going on. That's basically the setups for the trades. I mean, whenever the market approaches an area like this, so you see how the market clearly is in an uptrend, uses this as a support, I guess, quote unquote, and then there would be just your entry or your take profit would be something in the opposite. So if you have a new day opening gap here, your TP would be a VWAP, you would just have an opposite be a TP opposed to what your entry would be. So I'll say, for example, for us, put in a slideshow. So if you have this, for example, so your London lows are going to be your TP for being a previous setup or whatever, and your entry would be a VWAP. So I'll try to find a better example for you. Your entry was there. Now you gotta do something about that. 21, 22. Oh, it's the same. It's a different trade. Okay, cool. So you see how these looks like, yeah. What's it called? PM session highs. These are PM session highs from yesterday. So once it mitigated it, that's your TP, and your entry would be because of the new week opening gap down there. And yeah, took out a bunch of liquidity. SMT, this is a new day opening gap. Not a new, I'm sorry, this is a previous daily high or low. So that was your entry reason. Took out liquidity near there. Your take profit would be new day opening gap and VWAP going towards it. I guess new day opening gap. I'm sorry. Previous daily high or low. Made the SMT above that and then went down to take out that swing low right there. And it's literally rinse and repeat. This one here, previous weekly high or low, made SMT near that, used that resistance and went all the way down to the previous daily high and low. So went to this one here, obviously lower high, higher high. That's a VWAP, new day opening gap. Wanted to reach into it, and then started to push down lower, and then wanted to consolidate a little bit before we actually use it as resistance. So VWAP was there, got a little bit closer to it, and then it eventually went to the TP there. But I wanted to find a good example of like opposites, like you would see how he uses the this one here, new day opening gap as resistance, and then it went down to the view up as a support, I suppose, and we use those two to be your entry and your exit reason. So that's basically it. I mean, the strategy is very, very simple. Just don't get caught up in every single SMT, because not every single SMT is going to be making you money. So it's not going to be, the greatest strategy, most perfect strategy in the world, but it does have its statistics. So you see 86.27% out of 100 trades. That's very impressive. 44 trades won, 7 lost, and you would even see how we have the risk won is 220 and risk lost is 32. So your net gain is $187 for every dollar that you invested. Profit factor of 6.73 is quite impressive for gold anyway, and silver is almost double that. So, I mean, a profit factor of anything in double digits is absolutely phenomenal. So I'm very proud of that. Net gain of 191 is absolutely phenomenal with a 92% win-loss ratio. So this is included in, all the data here is backed up. It's not going to stop here. We're going to have, I don't know what's going on in here in Chicago, but over here, 510, well, technically on the eastern side, but anyway, 512 right there. It goes all the way up, over a month, around 617. So around a month and a week is, some good data there. So we're going to keep posting this. We're going to keep updating it, and we're going to update all the totals and stuff like that. But for the total of 89%, roughly 90% win-loss ratio, we have, the trades won and trades lost, risk won, risk loss, net gain is absolutely phenomenal. 8.36, 8.38, to have something anywhere near that is phenomenal. So I'm very proud of this setup. And everything that you see here, I came up with on my own, except for the SMT strategy or the market approach that's obviously created by ICT, but or whoever else found it before. It doesn't matter. I use SMT. I use those important areas. I made the whole idea here by myself, but for the majority of stuff, like the fine details of SMT and all that, I didn't create any of that. I didn't create new day or new week opening gaps. I just use it as, I guess, resources for me. So give credit where credit's due. ICT, great job. All the guys that made all the indicators, absolutely phenomenal job. I'm very happy with all the indicators on things like that we can use to help us make some money here. But that's how I do everything. That's how I make all my money here. And we could do another video on NASDAQ, but it's pretty much the same exact thing. 5-minute time frame, you just look for higher lows and lower highs. Same thing here, 6.73, 5.39. I mean, win after win. You know what I'm saying? So it's, it's not a hard thing. So you can even see how at 920, 925, 915, 925, relative equal high. This is obviously lower. So I'm sorry. This is higher. This is relative equal. You could short it into the new day opening gap, and it would look like a little something like this. Come on. There you go. So it'd be here, roughly. Have your stop loss just about there, and your TP would be close to the new day opening gap. So roughly there, 1 to 4. You could even play a little safer and go for a 1 to 3. Make your stop loss a bit wider. You could do a little something like that, and you could see how you could get a 1 to 3 pretty easily. Or you could just do the 1-minute SMT, which on a 1-minute SMT on NASDAQ is pretty much the same thing, back to back, but we don't use any important levels. We just use SMT. So here, this is a lower low, everything makes sense. There's no discrepancies. There's nothing to worry about here. So there's one SMT here. That's a short. That's a long. Short wouldn't have played out, so that's your one loss. Nothing here, nothing here. Nothing here. Not a whole lot of setups today. It'd be a relative equal. That's not good enough. Nothing. The new day opening gap's getting worked, and then it took out the liquidity below here. So I'll look for this would be a nice setup. So relative equal highs over here. Short. I'd probably look for a short, probably somewhere in here, maybe, or maybe even in here. Short, and then we take out the lows down in there. You could do it this way. This definitely gives you a whole lot more setups than anything else does. But I like doing the 5-minute time frame ones much more. So that's pretty much it. Not a whole lot of stuff that goes into the strategy. It's all pretty upfront and easy. If you have any questions, you have my phone number, my Discord, anything like that, go ahead and give me a call or give me a text or reach out to me in whatever way you got, and we'll see what we can do. Thank you very much.